Want to disable margin trading on Robinhood? It's a smart move for risk-averse investors. Margin lets you borrow money to trade, amplifying both gains and losses. This section explains how to turn it off and what to expect. Disabling margin requires settling any outstanding balance to avoid accruing interest. To disable margin in Robinhood, start by opening the Robinhood app on your device. Next, navigate to your Accounts section and select Settings. From there, find and select the margin option in the Settings menu. In the Margin settings, toggle the margin feature to the off position. If you have an outstanding margin balance, the app will prompt you to pay it off before disabling margin. Once toggled off, the deactivation process can take 1 to 3 business days to complete. To pay off your margin balance, you have two main options. First, deposit cash through your linked bank account. Second, sell existing securities in your portfolio. Robinhood will apply these funds to your margin debt first before they become available for other uses. Make sure to monitor your account daily to keep the balance at zero and avoid accruing interest charges. Robinhood charges interest on borrowed margin amounts around 12 to 15% APR as of late 2025. Interest is calculated daily and compounded monthly, so prompt repayment is crucial to minimize costs. There are no setup fees, but watch out for potential overnight holding fees. A margin call happens when your portfolio value drops below the maintenance margin, which is typically 25 to 30% of your account equity. The maintenance margin is the minimum amount of equity you must maintain in your account. It's usually 25 to 30% of your total portfolio value. To avoid liquidation, you must deposit funds or sell assets quickly to bring your equity back above the maintenance margin. Failure to act can result in Robinhood forcibly selling your positions, often at market prices, leading to significant losses. Cash accounts use only your deposited funds for trading. Margin accounts allow leverage, potentially up to 4:1 for stocks, letting you borrow money to buy more shares. However, margin accounts come with interest charges and the risk of margin calls if your investments decline. Cash accounts limit you to your own funds, but you avoid debt and forced liquidations. Here's a visual comparison of margin and cash accounts. Cash accounts are limited to your available cash, while margin accounts offer more flexibility but with additional risks. The leverage formula shows how margin allows you to control more shares with less money. For example, 4-to-1 leverage means you can buy $4,000 worth of stock with just $1,000 of your money. This illustration shows what happens during a margin call. When your investment value drops, you may need to add funds or sell assets to meet the broker's requirements, potentially leading to losses. In summary, the key differences are: cash accounts use only your deposited funds with no debt risk. Margin accounts allow borrowing for leverage but come with interest costs and the danger of margin calls if investments decline. Regulatory oversight on retail margin trading is increasing. The SEC has proposed new rules to curb excessive leverage and naked short selling. Expect tighter limits on loan-to-equity ratios and mandatory financial literacy tests for margin users by 2026 to 2027. Robinhood is shifting towards safer products like zero-interest cash management accounts and enhanced risk education to reduce margin reliance and promote sustainable investing. Real-world examples show how margin trading can lead to significant losses during market volatility. Many users have experienced margin calls, forcing them to sell assets at a loss to repay borrowed funds. Historical market data reveals frequent periods of volatility where margin amplifies potential losses far beyond initial investments. Financial experts consistently warn that margin trading is unsuitable for beginners. Unless you're an experienced trader, consider disabling margin to safeguard your investments. Always review Robinhood's terms of service and consult with a financial advisor for advice tailored to your situation.